Imagine a massive wave of buyers storming the Bitcoin market, pushing the price to a daily close above 66,000, and you're right in the middle of it trying to make sense of the chaos. Here's what's at stake. The entire cryptocurrency market is watching this move, and if Bitcoin can hold above this level, it could be the spark that ignites a new bull run. I think this is a crucial moment for traders, and we need to break down what's driving this price action. The current chart is signaling a bullish setup, and I believe it's essential to understand the factors behind this move. The recent news of AU. Iran peace deal has sent shockwaves through the market, with the dollar near a 10-day low and oil prices tumbling. This has created a perfect storm for Bitcoin, as investors seek safe haven assets and the cryptocurrency benefits from the uncertainty. Now consider the technicals. A daily close above 66,000 would be a significant breakthrough, as it would confirm a bullish reversal pattern and potentially open the door to a new uptrend. The VIX, currently at 16.19, is also relatively low, indicating a level of complacency in the market, which could be a contrarian signal for traders to take notice. But there's a catch. The Fed's hawkish tone and the expected lack of rate cuts in the near term could put pressure on the market, and we need to be mindful of this risk. Here's why that matters. If Bitcoin can hold above 66,000, it would be a testament to the market's bullish sentiment and its ability to shrug off potential headwinds. The 10-year yield, currently at 4.45%, is still relatively high, but the market is pricing in a potential rate cut in 2027, which could provide a tailwind for risk assets. I believe this is a critical moment for traders, as a wrong move could result in significant losses. For example, if you're trading a well-known stock like Tesla, you'd want to be aware of the overall market sentiment and the potential impact of a Bitcoin breakout on the broader market. Which brings us to the question, what's the best way to play this move? Should you be buying into the strength, or is it better to wait for a pullback? The bull case for Bitcoin is straightforward. A daily close above 66,000 would be a significant technical breakout, and the market is expecting a continuation of the uptrend. The bear case, on the other hand, argues that the Fed's hawkish tone and the lack of rate cuts could lead to a correction. Now, let's steelman both sides. The bulls would argue that the market is pricing in a potential rate cut, and the current price action is a reflection of the bullish sentiment. The bears, however, would point to the potential risks of a hawkish Fed and the uncertainty surrounding the U.S. Iran peace deal. I think the weight of evidence sits with the bulls, but we need to be cautious and aware of the potential risks. What this means for your money is that a disciplined trading approach is crucial. If you're looking to trade Bitcoin, you'd want to consider setting a take-profit level above 70,000 and a stop-loss below 64,000. For example, if you're trading a call option on the SPY, you'd want to be aware of the potential impact of a Bitcoin breakout on the broader market and adjust your strategy accordingly. The key is to stay nimble and adapt to the changing market conditions. And that's exactly what we do. We'd be watching the market closely, looking for opportunities to buy into the strength or wait for a pullback, depending on the market's direction. In conclusion, the current Bitcoin chart is signaling a bullish setup, and I believe it's essential to understand the factors driving this price action. The market is expecting a continuation of the uptrend, but we need to be aware of the potential risks and stay cautious. If you want to stay ahead of the curve and watch our live trading moves, join us in our Discord channel, where we'll be discussing the market's latest developments and sharing our insights. And remember, educational only, not financial advice.